to record it and I need to share my screen. So what have I got? Uh, I've got the agenda, if you like. I'm just going to go through. I did the background. I've done the basics. I've talked about trading plans, risk to reward, win rate, and need to stress accepting losses is part of the deal, if you like. Uh, you cannot possibly expect to win every single trade. You have to accept that you're going to lose some, and you need to keep that risk. You need to limit your risk, whether it's at 1% or 0.5%, but you need to accept that every now and again you're going to lose a trade, and you need to be able to say, well, I don't care about that because it's only 0.5% or 1% or whatever your lot size is. I talked about setting lot sizes. We know the times and the pairs to trade, but I'll just go through those again.
Richard, just
Yeah,
before you carry on, that Paul recommended a very good book, and I've read it, and I've had it on audiobooks as well. It's called Best Loser Wins.
that's the one. Yeah, I've got that. I downloaded that.
Tom Hodegaard.
It's on Amazon. You can download it for free,
Yeah.
I believe. It's best loser wins. It's on Amazon, and it is an excellent book. And it talks about accepting. Well, it basically says if you're not prepared to lose, then you shouldn't be in the game, kind of thing.
You think you're going to win every time?
Yeah, that's right. So yeah, that's a recommended book. I've got it. I read it, and it's certainly influenced my attitude to trading.
Richard,
Yeah.
What's your? Have you got an expected win rate?
Well, that's something that I keep getting beat up. Everybody, well, not everybody, but a lot of people ask me that, and I always say, "What?" I was going to swear then. What the hell has my win rate got to do with your win rate? Because I could tell you what my win rate is, and then if you fall slightly below that, you're going to complain. Basically, there's a little story that Paul tells about that, and that is when you're at school or at college or at uni, there'd be so many people in the class, and you all had the same lessons, you all had the same textbooks, and you all had the same exam, and of course you all got the same grades, didn't you? Well, the answer is no, you didn't, because everyone's different. So my win rate has got absolutely nothing to do with your win rate. But I went through something the other day where I showed that even if your win rate is 50%, which is highly unlikely, but if you're winning 50% of your trades, you're still going to be in profit.
Yeah.
And with this strategy of going for a risk to reward of 1 to 2, if you stick to that, you're going to be in profit even if you're only winning 50% of your trades. Your win rate is down to how you trade and how you get in and how you get out and so on and so forth. And everybody's different. And so me giving you my win rate is not going to be of any assistance to you at all. And it constitutes, in the eyes of the FTC or whatever governing body you're referring to, it constitutes a claim. And I'm not prepared to start making claims because we fall foul of the FTC by doing that.
Yeah. I was just looking at the indicators. If you've got a certain number of indicators you're using to try and help you with a decision, and then they all actually fall in, and we're all using very similar indicators. I was just curious how much of a contribution they made to either a win or a loss. That's all.
Yeah, I would say the biggest factor, bigger than the indicators and bigger than your strategy, the biggest factor in your success in trading forex is going to be your mindset and how you approach it, etc., etc. It's down to you to take the trades and you use the indicators to give you the clues but everything else is down to you and your mindset. And I'm not deliberately avoiding the question. I've said often I'm not prepared to start making financial claims, because then you can fall foul of the FTC, and then they might stop me doing these sessions, and then nobody benefits. Yeah. But I mean, I would say that if with practice you find that you're losing 2 out of 3, then you're doing something wrong. You should be winning 2 out of 3. That sort of you should be in that kind of ballpark. 2 out of 3 is a good ballpark to be in, and then you can improve on that. So we've done trend line placement. The importance of checking the news. I hope the previous sessions have emphasised that, because we've seen that the price can rocket upwards or tank downwards at news time, and you don't want to be caught in a trade at that time. There was some 7 o'clock news this morning which affected price, which I'll have a look at. Trendline placement, I've done that over and over again. Indicators, I've done it briefly, but I might, well, if there are any questions, I can go through that again. Placing stop loss, I'm going to go over that again today. Take profit, I'm going to go over that. And I'm going to try and start building my checklist and thought process, and a little bit on backtesting. And we also need to look at the POCs, the volume profile. So we've got a fair bit to cover. So let's have a look at the charts first of all for this morning. I've got a chart. I'm not quite sure what it is on screen. Right, GBP AUD was one of this morning's possibilities. I've just moved you guys out the way. Excuse me. This was this morning at 7:24. Oh, I need to look at the news, because that is important. So let's have a look at Forex Factory. Can you see Forex Factory on your screen?
Yeah.
Yeah. Okay. So this was Forex Factory today, bank holiday in China, 7 o'clock, 7 a.m. UK time. Red folder. I keep calling them red flags. It is a red flag. It's the GDP month on month, and there was another 1, 2, 3. There was another half a dozen low impact items, and 1 medium impact item. So that tells me that 7 a.m. this morning UK time, any pair basically is going to be affected by this news, because if GBP, for instance, gains in strength, all of the other pairs are in danger of losing strength. So this can affect all of the pairs, not just the British pound. There was also some news later in euro, on the euro, sort of 9, 10 o'clock. None of them particularly high impact, but because there's a lot of them, that can affect the euro. And then the other thing I want to point out is 1:30 this afternoon, we can expect some movement on the US dollar, because there's 4 high impact items. If you look at my FX book, you'll probably find that there are even more red flag items at 1:30. But for our purposes this morning, we just want to look back and understand why price did what it did. So this was here. This was well, I need to find 7 o'clock on the. That, I believe that was the 7 o'clock candle. Yeah, that was the 7 o'clock candle. Now, I was watching the charts from 6 o'clock. I was tempted to, or would have been tempted to get in once price got below the red trend line. So that candle might have been an opportunity to get in, but I was conscious of the 7 a.m. news, so I stayed out. And you can see how price went all the way down there and then came back up again. Then price went sideways, and then it started to go down. Now I waited for that point, and I'll put the indicators on to show you why. We're on the 2-minute chart. The water atta is the biggest clue, because up until that point, well, up at 7 o'clock, there was a strong possibility of getting in for a sell. That was telling me everything was looking good, but I was conscious of the news. So I deliberately avoided the news. I waited for the next opportunity, and there was one there, because the explosion line was above the explosion line was moving away from the dead zone, and the histogram was above the explosion line. So that would have been an opportunity to get in. As it happened, I waited a little bit longer. Don't know why, but I waited and got in on that one, and took 1 to 2 at that point there. That was 8 o'clock, by the way. You can see those big pushes down there. That was 8 o'clock and 8:02. So there must have been something going on at 8 o'clock. But I avoided that 7 o'clock news quite deliberately and waited for a better opportunity, and got in GBP AUD. I believe GBP NZD was similar. You can see there's the 7 o'clock. Could have been tempted to get in. The news would have put me off getting in. There's another reason why I wouldn't get in on that one, and that was that price was actually just straddling the yesterday's POC. And yesterday's POC price can actually come down and bounce off it, or it can go slightly through it and then bounce back again. So you never know what's going to happen when price is at or around the POC. So that's another danger area. But the biggest one was the 7 o'clock news. So I avoided the 7 o'clock news. I waited until price settled down a little bit after the news. I got in on this candle because price is starting to move away from the POC, and there's your 1 to 2. If you'd stayed in longer, you would have got 1 to 4.5, I believe. So there were 2 trading opportunities. We'll look at the euros, and then we'll look at euro US. This would be sorry,
Richard, when you put the point of POC on, is that just a straight line that you choose to have dotted? You go back to the SVP and look at it, find it, and then just drag it across, or is there some other method?
I'll show you what I do there. I'll go to a bigger time frame. It's easier to see. I'll go to the 15-minute. I right click on there and reset that chart. I put on SVP, and there's yesterday's point of control. It's marked in red, but when you get into today's and the price actually hits the POC, the red line disappears after that, which is why I put a horizontal ray on there. I'll put it on there for now. No, I won't. Horizontal ray. Put it on there. So as you said, it is a black line, unbroken line. I just changed that to a dashed line.
Right.
And
Okay, thank you.
then I place it there, and then I can get rid of the SVP because it's just a distraction.
Yeah.
You can leave it on if you want, but I find it distracts. So that's where I got my POC from. If I get rid of SVP, the line disappears and it leaves my POC. I'm going to go through volume profile probably today, I think. So we've looked at that one. We'll look at the euro. This would have been a loser, but I marked it up just to demonstrate. I think this is the one that demonstrates you can do everything right and then still lose the trade. So if I drop down a 2-minute chart, and I'll talk through this one. So go back to my first opportunity to get in would be on this 6:16 candle, because I've had to wait for the 6 o'clock 15-minute candle to close, so I can't get in before 1/4 past. So the first opportunity is 6:16, and then if you look at the price is actually still in no man's land. So first potential opportunity is this candle here. Now I wouldn't get in on that one because it's still touching the red trend line. I wait for it to get away from the red trend line. So that would be my first opportunity. But if you look down at the water atta, it's not an opportunity because the black down here, the black explosion line is still below the red dead zone. So that's not really an opportunity. And now look at where it is there. It's actually sitting on yesterday's POC. So I'm expecting it to either bounce or break. And in fact, it actually bounced. And then it bounced there again, and it bounced there again. So I waited for a better opportunity. And at this point, this candle, which was the 7:04 candle, and you'd be amazed how many days you get a move just after 7 o'clock. Keep an eye on that. There's no, well, there is a reason. There is a potential reason for it, and that's when the markets start to open and start to have an effect on the price. So at 7:04. Price was above the green trend line. There was a gap between the green trend line and the candle. Well, if we look down here, first of all, because this tells me I can get in on that candle there, that histogram there is well above the explosion line. The explosion line is moving away from the dead zone. So I look a little bit closer, put the straightforward forex on. I notice that we're in a wave up. We did have red PSARs pushing price down. We've now got green PSARs pushing price up. So on that candle there, the straightforward forex is giving me a good signal that I should be getting in. And then as an extra confirmation, if I look at the clouds, I can see I'm going to take off straightforward forex for now. And I'm going to try and take off the candles if it'll let me. Yeah, so I've now just got the cloud, and you can see that on at that point, just before my entry candle, there was a crossover. The 13 crossed over the 62 at that point there. So the 13 is heading upwards, and we went from a red trend to a green trend. So we've got a green trend here, we've got a red trend here, and now we're back in a green trend. So that's an extra confirmation. And so basically I'm thinking everything's telling me I should be getting in for a buy. And so I did. And so before I actually get in, I mean, I'll probably mark this. I probably wouldn't, if I was just trading on my own, I wouldn't mark that. What I'd be doing first of all is thinking, how big a stop loss do I need to put on this trade? So I would look left and I would say, okay, this is where I'm about to get in. Where's a good stop loss? And quite unusually, there weren't any stop losses indicated because there was no engulfing candles. If we just look back candle by candle, there's no engulfing candle at all. Well, there was one there, and that was actually where I placed my stop loss. That engulfing candle at the bottom of that engulfing candle. There was no others. I'm just looking at these. Can you see these two? That point there and that point there, those are sort of equal lows, but that would have given me a too big a stop loss. As it happened, I was on 8.5 pips down to the bottom of that engulfing candle. I believe at the time there would have been a green horizontal line coming out of there, but they do disappear after a certain period of time. So actually we've got nothing. Can't see any lines. I just need to check my settings, but the engulfing candle is one potential stop loss. The wave up candle is another potential stop loss. So the bottom of that candle would have been an alternative stop loss. But I was quite happy with that one because it's below the red trend line. It's definitely below the green trend line, and it's below the 200 moving average. So that I was comfortable with that. And the other thing I do before I get into a trade is I look left on a higher time frame. If I reset that chart, there's my potential, there's my 1 to 2 there, and I'm looking left. And if you follow that dashed line across there, you'll see that there's an area of imbalance here. So from the top of that wick upwards, that candle is all in balance. Now I wouldn't mark this, I would just note it, but there's an area of imbalance. I just need to check. Yeah, so price is going to have to go and take that out, but at least it'll go at least to the bottom of that imbalance. And I just went for 1 to 2, and or would have gone, well, yeah, if I was in that trade, I would have set my 1 to 2 up there, and I would have been quite confident to get in because there's an area of imbalance there. As it happened, it didn't go so far. So this one would have been a loss. Let me just get back. There we go. Now, I've just talked through why I got into that trade, and everything was positive. So the Water Atta was telling me get in. The straightforward Forex was telling me to get in. The clouds were telling me to get in, and the outstanding imbalance was telling me that that was reasonably safe, take profit. But it didn't go anywhere near. It turned around. It stopped at less than 1 to 1. So that was one of those trades where I'd taken all the precautions, if you like, and I still lost. But because that red area there represents 1% of my account balance, because I've worked out the lot size, I know I've lost 1% of my account on that trade. I don't care. I still got 99% left, and you know, I've got two potential winning trades on the GBP pairs. There's a potential loss. Let's have a look at the fourth one. I can't remember what happened with this one. This was a nearly. So if I'd taken this one, I would have been looking at. Well, I'll talk you through it. 2-minute time frame. We're looking at. This was a late trade. So 616, can't get in before then. Price is, well, this is keeping me out. The Water Atta would definitely keep me out all the way. That might be an opportunity. Why wouldn't I have got in on that one? Well, basically because it didn't look like a particularly strong move, and it wasn't. It was also hovering around yesterday's POC. So I'm waiting for a better opportunity. This looks it wasn't good enough for me, and I can't get into a buy because I'm below the green trend line. So here, what are we looking at? We're still touching the yesterday's POC. Might have been tempted to get in there. This would we got into red PSARs, sorry, green PSARs pushing price up. So I'm out. I'm obviously out until they change. At this point they change, but we're still above we're still touching the green trend line. This one, I'm just waiting for a bet. So that's the better opportunity. That is explosion line moving away from the dead zone, the histogram above the explosion line. So that's a good opportunity to get in. If I got in halfway through that candle, where would I set my stop loss? Let's just have a look backwards, or to the left, I should say. That engulfing candle, that's the nearest opportunity. There is a wave down candle there. There's a engulfing candle there, but this was giving me 6.1 pips. I'm happy with that. And then I'm going to show you why I trusted this 1 to 2. 1 to 2 was where that black line is. When I look left, I can see this point here. So earlier today, price was coming down gradually. It got down as far as that point there, and then it suddenly made its way up. Now that was probably news. That was, oh no, it was at midnight UK time. So something caused price to go up there, but it got down as far as that, and then it went upwards. And so I saw that as a potential reversal point later in the day. So I was quite happy for my 1 to 2 to sit on that line. As it happened, it didn't quite make it. So that would have been another loss. Let's have a look at, so we've looked at the 4 crossfire pairs, but as you know, I keep an eye on Euro US. And there was a certain amount of good fortune in this trade, in that it just barely got to my take profit. It did go through it, but it very quickly, but it wicked up to it and then started going downwards. So that there's some good fortune there. But I'll just talk you why I got into that trade. I'm sort of building up a checklist here. I'm doing it verbally, but we'll get it in. We'll get it written down shortly.
Richard,
Yeah.
Did you have a take profit set for that point on your? Would you have it all set so if it clicks it, you're out?
Yes,
Yeah.
When I get into the trade, I know that if you look at the to the right there, that 1.07413 would be my setting on the on my
MT4.
Yeah, and I would just I would have it in there. Well, the reason for having it set on your MT4 is because it can wick up and wick back down again, as it did there. And it quite often does that. So if you're just sitting there waiting to press the button, you might miss that. Do you follow what I'm saying? Okay.
Yeah, definitely.
If I sit with my finger on the button, intending to get out at that point, it happened so fast, I could well miss that opportunity. So I actually input the number in my MT4 as my escape. So I'm going to talk you through this again and then go on possibly to volume profile. So what goes through my head when I'm getting into a trade, I'm looking at 616. That's the earliest opportunity I could get in. Don't want to get in at that point because price is actually sitting on the red trend line, it's sitting on the green trend line, it's also sitting on the black 200 moving average. There's no way I'm going to get into a trade when everything is congested like that. I need price to break away and show a clear gap between the candle and one of those lines. So I don't know which direction price is going to go in until well, I'm actually in a wave down, so I'm thinking potentially we've got red PSAR, so potentially we might be getting into a sell, but it went down as far as the green trend line, bounced off it and started going in the opposite direction. So we've got green PSARs. So at this point we've got a wave up. We're above the green trend line. We're also out of that congestion there. There's two clear lines I want to avoid, but that one but that didn't become a wave up candle until it finished, until it closed. So I didn't know that that was a wave up at that point. Looking at that candle, it's contradictory because price is going down and we're in a wave up. Still a bit of contradiction. I'm waiting for price to make a more positive move. These were potential entries, but the Wada Atta denied that. The Wada Atta at that point began to look like it was a buy because the histogram was above the explosion line. The explosion line was moving away from the dead zone. So that was my first. That'd be when I got in on that candle there. Looking at the we've got the 200 moving average just gradually moving upwards. We've got the 513, so 513.62 all pointing upwards. So that's a good point to get in. The Wada Atta is confirming that. So get in, say halfway through the candle. I have to look for a stop loss. That wave, that engulfing candle is probably what I was aiming for. I ended up slightly below that. Why did I go below that? Right, I don't. Maybe that was just in the heat of the moment, if you like, in that I was trying to set a stop loss. I intended to set it there. If I'd set it there, there was a danger of me being taken out because price wicked down pretty close to that. So it was perhaps a good job that I set it where I did because I was still in it up to that point. That was 1 to just over 2. It just made it. So that was my stop loss. Why did I set? Well, that was my 1 to 2 position. So if I look on a bigger time frame and look left, try and reset that. So I'm looking at that point there. And if you look left, there's a huge amount of imbalance in that candle. So it wasn't a particular point I was aiming at, but it was part of that huge imbalance there. I would say that fortune was on my side there because if I'd set the stop loss accurately on the bottom of that, no, well, on the 15-minute, no, I'm on the 15-minute. I want to go back to 2. Yeah, if I'd set my stop loss at the bottom of that candle, oh, it's about where that's about where it is. Yeah. So I didn't take all 5 of those trades, and I'll just go through the reasoning why I didn't. This one was at 640, so that was an early one. the other two winning trades were $7.24 and $7.24. So that they both happened at the same time. Now, I wouldn't have been in both of those because both of them have got GBP in them. So the trade I was actually in was GBP AUD. There's a reason for that in that if I've got a choice of those two pairs, I would always go for the AUD because at that time of day, the broker spread is higher than it is once you get later in the day. And the NZD pairs are generally the higher of the broker spread. So I would always opt for the AUD if I was in a choice between the two. I certainly wouldn't get into those two pairs at the same time because if they both go in my direction, then I'm happy. But if they both go against me, then I've got double the losses. So if I'm in GBP AUD, I don't want to be in Euro AUD because that's two AUD pairs. So my only other option is Euro NZD. So I would have got, I'll just go back through this, just trying to explain my logic. GBP AUD, I would have gained 2% on that trade. If I was also in Euro NZD, because those are opposite or opposing pairs, I would have lost a maximum of 1%. Had I waited until price came all the way down to the stop loss, I would have lost 1%. But do you think I would have waited for that? Possibly not. I might have decided to get out before that when I could see that it was, well, we got in a wave down, and that would probably be my time to get out. So I wouldn't have lost a full 1%. I would have lost maybe 0.5% on that, but let's call it 1%. So I've gained 2% and I've lost 1%. So I'm still up 1%. And then if I'd taken this additional euro, which is not a crossfire pair, but I could potentially have had 2% out of that one. So I would have been up on the morning by 3%, even though I'd lost one of my trades. So I've won on that, on GBP AUD, I've won on Euro USD, and I've lost on the Euro NZD. And that's what I mean by 2 out of 3. I'm not claiming that as my win rate, but it gives you an idea of what sort of rate you can get if you're consistent. I'm going to change the topic in a minute, but are there any questions on anything that I've done so far?
Oh, I found that really useful. I've got to sort of get this memory, what do they call it? Memory muscle going, that I'm thinking the same as you are every time I look at it. And at the minute I'm missing, I can't think of it as quickly.
Well, that's right, but it comes with practice.
Yeah.
It's like everything else in life. The more practice you have, the better you get at it. Yeah, that's what it's all about, and that's what I was saying before. If we all play by the same, if everybody followed the rules exactly, precisely, we would still get different results because people are different. And it's the human factor, it's the mindset factor, and all of those aspects that are the difference between your results and my results. I'm not claiming, don't get me wrong, I'm not claiming that I win 2 out of 3 every day. I'm just saying that it's possible to win 2 out of 3 every day, and by being consistently applying the rules. And the rules are pretty simple. Let me just go through the rules. just find a little bit here. I'll try. I've actually published these rules before somewhere in Discord, but if we just, my number one rule is, that's where I need a bit. So the first thing I consider is price above the green. I'm just going to do this sort of in shorthand. Above green or below, or is it above the green trend line or below the red trend line? That's the first thing I ask myself. If it's not, if it's neither of those, it's in what we call no man's land, and I'm not interested. So let's say okay, so if it's above the green, is there a gap? Is there a gap between candle and trend line? I like to see clear space. Where are it? Just try and find an example. There. You see here that there's a green candle, but it's actually no. I'm talking rubbish, because there's the green trend line. So here we've got a candle, but it's and it's heading upwards, but it's actually still touching the green trend line. That candle is clear of the green trend line, well clear. So I'm okay. Is there a gap between the candle and the trend line? If not, I leave it. If so that these are all, if so, what's my next criteria? If so, do we have a wave up? So we need a wave up. If so, do we have green presets? And obviously, because on my chart, the green PSARs are obviously below the current price, pushing price up. So if we were in red PSAR situation, we wouldn't be getting in. But so far, are we above the green trend line? Yes. Is there a gap? Yes. Do we have a wave up? Yes. If so, do we have green PSARs? If so, what do I look for next? I look at the well, it's a toss up between looking at the water atta first or looking at the 513.62. I would probably look at the water atta.
Would you look at the moving average, Richard?
Well, yeah, that's what I'm saying. The moving average, it's a sort of a toss up between looking at the moving averages, which is the 513.62 and 200, or do I look at the water atta? I probably, if I think through, I probably look at the water atta first, because that would keep me out. That's not right. I would look at the water atta. Now, I'm not going to put everything about the water atta because it's it's a bit long-winded, but basically is the explosion, which is the black line in my case, is the black line actually moving away from the red line, and is the histogram a nice dark green and above the explosion line? So I'm not going to type all of that, but if the Wada Atta is not in my favor, then I stay out, and then I don't need to look at the moving averages. But if it is, so again, these are all if so's, because you need all of these in place to get in. If so, look at the moving averages. Check the MAs. And if everything is in confluence, then I would get in. But before I get in, I need to establish my stop loss. And personally, I like to go for a stop loss that's somewhere between 5 and 10 pips. But my stop loss will be based on and if I was going for a buy, I'd be looking at the bottom of engulfing candles. Now, when you're actually looking at the charts live, you'll see those lines are on, but they disappear after a while. I think Kevin's programmed it so that it retains the previous 3 or 4, but anything older than that, they disappear. So your choice of stop loss is down to you. I would go for 5 to 10 pips, ideally. I do occasionally take a bigger stop loss, but remember, you've got to adjust your lot size. And I've got lot sizes written down here for all of these pairs for 5 pips, 10 pips, and 20 pips. If my stop loss is 7 pips, then I'd round it down to 5 or round it up to 10. Just for speed, really. And then I need to establish my take profit. And establish take profit based on looking left. And so I look left, normally on a higher time frame. And I'm looking for outstanding POCs. Or imbalance. There's a few indicators you can use. There's an indicator called support and resistance, which will give you some lines across the charts which price can bounce off. Or there's an indicator called levels, which is very similar. It's like pivot. There's one called pivots. So where price has pivoted before, but I keep it to these two. I look for outstanding points of control. I look for imbalance. Oh, I'll tell you what, there's another one. I look for, if I was going for a buy, I'd be looking for equal highs. So I'll just try and find a good example of that. That's not right. Equal highs. That's not. Where did I ever go? So that's a first stab at putting in writing what my. I need to go to a higher time frame. Okay, I need an even higher time frame. So there we go. Equal highs is along there. I'll rewrite those properly. I'm sure I've done it before, but there's nothing wrong with having a fresh look at it. But these are all basically what I'm saying. You only go to the next stage if you've got a positive answer from the previous, from the current question. You don't move on to the next question if you've got a negative. So basically, those are all interdependent. And then you look at your stop loss. You look at your one. I would mark a 1 to 2, and then look left and see if it looks realistic.
You're on your highs and the lows. How far are you going back, Richard? Just one session?
No, I would look even further back. I mean, I might go if I went, let's say, on a 1 hour time frame. If I couldn't find any, well, if I find them on the current session, then I don't look any further back. If I don't find them on a current session, I just keep looking back until I do. Let me just. I'll try and find an example. So I mean, let's say that's my target. So I need to look left from there. Is that, you see that one there? There's found some resistance there. So that was not an equal high, but there is a pivot point there. Price has come down and then bounced off it. So I'll bear that in mind, and it would say to me that there's a good chance price might go up there and bounce. Now that point is just above my take profit, so that gives me a bit more confidence. Let's look left from there. No, there's nothing there showing. So I'm going too far back now, but actual size. Come on, there we go. So if I'm aiming at that point there, I think that this massive imbalance would give me some confidence to get in, because it's got to go and take out that imbalance at some point. And then where you've got this, there's a pivot point which is just above my take profit. I've got a feeling that price is going to go up to that point and then turn around. And if we just have another look, it actually went up to my. I don't think it did quite go up to that pivot point, but I would be confident that it would probably turn around before. Let's just mark this, because if I mark that, that is where price turned around. You can either go from the bottom of the candle. Let's go from the bottom of the wick, because that's where it actually turned around. And if I make that a solid black line, and look at that. Isn't that strange? That's almost exact. If I look at the 2-minute chart, get a closer look. So there's my turnaround point, if you like, and that's where price actually just about got there before it turned around. Okay, I will work on a properly worded checklist, but you've got one there. If you look at the replay of this video, you'll be able to take a screenshot now, but there's a little bit missing off the end. So I'll have a look at that. We are coming up to 11, but I'm just going to very quickly, really 5 minutes, look at volume profile and then spend a bit more time on it tomorrow. Reset the chart. I need to, I normally look at the volume profile on the 15-minute chart, and I'll explain why. I'm going to take off the straightforward forex. I'm going to take off the clouds and the water atta, and just click on SVP. Now remember where I found SVP yesterday under, was it under technicals or under yes. So if you click on technicals, then you click on profiles, and there's a number of different profile. I did a video in my YouTube channel. I did a video comparing the different types of volume profile that you can use. I'm using session volume profile, that one there, and comes up as SVP. You can hide it. I like to look back. I like to condense it. And then look back. So this is today, this is Wednesday, Tuesday. So I like to get a few more days in. So I can still see today's, but I'm getting extra days when computer catches up. Right, okay, there's an example. That's what I wanted. I'm going to take these off because these are distracting me. Come on. Okay, I'll leave those because that's on today's. So what we've got, first of all, I can see yesterday's volume profile is that one there, which is what I've got marked. I'll move these out of the way. Okay. So there, I've got yesterday's POC. That's today, start of today's trading, that blue horizontal dashed line. So that's yesterday's, which I've got marked already. There's another one up here, and I must have missed that because I haven't marked it, but I'll mark it now. So this is what I do. I see an outstanding point of control. I put on a horizontal ray as near as I can make it, and then I change that to a dashed line so that when I remove the SVP, I've got yesterday's POC and I've got an outstanding POC, which I would normally mark O/S piece POC. And that black line is now irrelevant. So I've got two close by. If I put SVP back on and just maybe look a little bit further back. Really hoping to find one below, and then we've got a full set. But no, there isn't one. So the other thing you need to go, this red line only appears when you go back far enough on your chart, and for some reason it won't. Not moving. There we go. Because so I need some more blue lines, but it's not. There we go. So it looks as if those are the only two outstanding POCs we need to worry about. If you look at maybe a different pair, you might get more than two, but you've got today's POC as well. I don't tend to bother much with today's POC. Right, and then just really quickly, I'll look at SVP settings, and I'm going to cover this again tomorrow. But under inputs, I've got all. You can choose what, you know, one session or, but I've got all sessions. I've got volume up and down. I've got volume area 70, number of rows, row size 100. I've got extend POC right, and I've unticked the value area high and value area low. I'm going to put them back on, and you should in a minute see them. Oh, I've got to change the style as well. Value area high, value area low. There we go. I'm just going to come out of that and then reset the chart. So this is yesterday's POC, the red line. We've now got a blue line up here and a blue line below. This is yesterday's volume profile. Beginning, so price went as high as that. You can see that was the highest point, corresponds with that. This was the lowest point down here. So this is the entire profile, beginning down there, going all the way up there. Now these blue lines represent the top 70% of the trade. So these were sort of the lesser 30%. There was a little bit of the 30% below, but the top 30% of trades during yesterday were from that point there up to that point there. And you've got the absolute peak there. There are one or two, if I just move the candles out of the way. Okay, so we can take these off as well. Those are my trend lines from yesterday. Okay, and just ignore that. So I'm looking at value area high, value area low, and the peak. What I'm noticing is that there's a slightly lower peak just there. And the third sort of peak is down here, but it's possible that price might be attracted to that point. It's more likely it'll be attracted to that point. Now this red line behaves like a magnet to price. And one of the strategies that I used to teach, we called it V70, was based on this value area being the 70% of the total. So basically, we waited for price to go to the value area high, for instance, and we expected it then to start coming down. Well, it would either break past it and then we lose interest, or if it bounces off and it starts heading back towards the POC, we'd take a sell from that, or from whenever we got in, heading downwards, and we'd have that as a take profit. And then we'd wait and see if price bounced or broke. And if it bounced, I found that there was a potential to take a trade back up to that value area high. And then when it bounced off that, if it continued up, I lose interest. But if it starts to come back down again, I start to be interested in taking a sell down to there. Now, if it breaks past that point, you can potentially take a trade down to that value area low. And then you wait for price to either bounce or break. If it breaks, then you lose interest. If it bounces, then you take a buy back up to that point, because this point behaves like a magnet, and price will always, well, price can do two things. It can either go off on a what was it we used to call it, a voyage of discovery. It would go up and it will find some new pals up there, or it would start clinging to the POC. And quite often, if it starts clinging to the POC, you'll find it keeps bouncing backwards and forwards and backwards and forwards all day long. If it goes outside, then you lose interest because it just goes off on a voyage of discovery. But whilst it's in that value area, and I think we used to put a shaded blue area in there and just focus on taking trades back down to the POC, back up to the POC, up to the value area high, down to the value area low. Now I'll put the candles on and just see what actually happened yesterday. So you can see it was sticking to the yesterday's POC, then it went up to the value area high. Now when it turned then, I would consider getting in, depending on how many pips, I would consider getting in for a sell down to that point there. And then when it clearly broke away from there, I would consider getting in for a sell down to that point there. Then when it started to move away, I would consider getting in for a buy up to that point, possibly for a sell, possibly for a buy. It's hovering around it, wait till it gets there, take a buy up there, lose interest because it's left the ballpark, it's left the what did we call it, a field of play. So that's my field of play. Once it goes outside, I lose interest. But you can see there were 1, 2, 3, 4 potential trades there just on one POC. Now, if you measure, because it's dependent on how many pips there are, if you measure that, then there's 11 pips from top to middle. There's 23 pips or total range. But if you're getting 10 pips, you get less than 10 pips in that move, you get 10 or 11 out of that, you get 10 out of that, you get 10 or 12 out of that. So that's why I use points of control, because yesterday's point of control is a very strong magnet. If you've got another outstanding point of control lurking nearby, I think we did have on this pair, didn't we? There we are. We've got an outstanding point of control up there. Now, if price comes outside this value area, this is a value area line from a previous day, which is why I tend not to have those lines on permanently, because you get loads of lines from previous days. But that's another potential target. So if price breaks out of the current field of play and starts to head upwards, I might be interested in taking a buy up to that point. I'd take other factors into control. I'd look at into consideration, and I would maybe look at imbalance on the way up there. But that is a potential target. And the better target, or the more relevant target, is the bouncing in up and down on yesterday's. So what I would do if I was going to trade this, I would get rid of these blue lines. I would actually mark this area there down to there, and then I would get rid of the I would take off the value area high line and the value area low line. And this is just personal choice, but I like that much better than having all the blue lines on. And if you take the red lines off as well, you've still got so you've got yesterday's point of control, you've got value area high, you've got value area low. Just my way of decluttering the chart. So that's really just an introduction to volume profile. It really is a powerful tool, and I'm going to do more on that tomorrow. So tomorrow I think I've got to do volume profile. I've got to do something on back testing, and then any questions that anybody's got, we'll deal with those. So anybody got any questions on today's session?
Only if I can just get one thing straight, I know you're going to talk about it again tomorrow, but you can't trade, or can you trade today's volume profile indicators today? Because it doesn't that change? Don't those
Yes.
areas change during the day?
Yeah, today's volume profile will move as price moves around. So let's have a look at well, we'll put session volume profile back on. So today's volume profile is here, and as you can see, price is pretty much stuck to today's volume profile. We're on a 15-minute chart there, but we came below it for a while, and then we went up, and we're just bouncing around on today's volume profile. Now we're looking at Euro US. So watch it at 1:30 and see what happens, because there's high impact news, and there's bound to be a movement. There's bound to be some price manipulation, and it'll either well, I'm looking at this now. I'm seeing this as a potential target. If it tanks, it'll probably go down to yesterday's POC. If it goes upwards, then I believe the outstanding POC is probably out of reach today. But you know, I'm thinking if it's going to go for a sell, then that's a potential target. I can't use today's because we're just basically hovering around it at the minute. But later today, if price goes up here, then the volume profile will end up coming up here, and therefore the POC will. Depends where the traders today place their trades. So New York opening will probably move that. I'll tell you what I'll do. I'll mark the current POC, and then I'll look back at it later today. The current POC for today is there. And if I mark it as a double thick, I'll make it twice as thick as all the other lines. I'll make it a solid line. So I've now got a thick black line where today's POC is. If I come back at 2 o'clock this afternoon, that will have shifted. There's no doubt about it. So it's not as reliable today to use today's POC.
Yeah, okay.
Which is why we look at yesterday's POC. And the reason that we're so keen on yesterday's POCs, there was a guy called Jeff Goodwin who introduced it to me, and then I took it up. I back tested this POC, this value area high, value area low. I back tested it to death, and it works. Doesn't work every day, because sometimes the say price goes off on a little wander. And if it steps outside that yellow field of play, I lose interest. I'm only interested whilst it's within that field of play. But when it's in the field of play, it's a good strategy. I've won many a trade on that strategy alone. And what I did was I incorporated, when I realized that I was doing Crossfire, and I was looking for potential targets for take profits, I remembered this, and it works. If you look at some of the trades that I've posted in Discord in Raining Pips, the number of times you'll see price going to yesterday's POC or to an outstanding POC, it's remarkable how many times it happens. But it's because that red line is a magnet. There's a reason for it. And I'm probably not the best to explain it. Kevin would probably explain it better than me, Kevin Ohm. But it's to do with this volume profile. It's to do with the fact that this is where people are placing the most trades. Now, when we talk about trades, we're talking about orders. So you're placing an order to buy or to sell, but you're also placing stop losses, and they are orders as well. So basically, the big boys are investing lots of money at that point, or at this point, I should say. At this point, that's the maximum amount of money that the big boys invested yesterday, and they don't want to lose that money. They need price to come back, and if you're a buyer, you want it to go above that. You're hoping it'll go above that price, and if you're a seller, you don't want it to go above that price. So what they do is they invest even more money in sellers to force price down, because the more in any market, the more people selling houses, the lower the price goes, and the more people buying houses, the higher the price goes. It works in a similar fashion, and you know, you can go into the nth degree on why it's important. I just know it works. That's all I care about. And I know that it works even better when price is within that field of play. And just look, I mean, that this morning was that, yeah, that was this morning. You had so many opportunities. You had 1, 2, 3, 4 opportunities for a trade, and each of them would have been 10 pips ish. We'll spend a bit more time on that tomorrow. Any further questions? And then
Hi, Richard.
I'll put the recording in Discord later.
Hi, Richard.
Yeah, hi.
I've been playing with this for a little while, but the fixed range volume profile, and you don't have to go through it a lot just now, but on the last low and high on Euro USD and Euro NZD, the POC on that fixed range, on your dollar one price, the POC is under price, and I've been looking at that as a point of, is it going to be a buy, or is the buy going to be strong, is the sell going to be strong? And the Euro USD this morning on your chart, it was above price and it didn't get through, and on the dollar it was below, and price moved up. In fact, the big move up this morning was 7 o'clock, which is obviously it's quite a good time for something to happen.
Yeah.
But yeah, so maybe that's something to people to play about with. But it's quite a good extra.
There's a lot more to a volume profile than I've discussed already. There's a lot more to it than I know, and a lot more than I use. But I mean, you mentioned yesterday there's a developing profile, which is important as well. All I would say is, if you're interested in volume profile, if you go into TradingView on their YouTube channel, they've got lots of videos on it. Or if you want to look at my videos on my YouTube channel, I compared the different volume profiles, and I think I explained the difference between them. So there are videos on volume profile that you can find.
Yeah, I'll have a look at that one. That's good.
Yeah. Anastasia was well into volume profile. And Kevin Ohm, who programmed the straightforward Forex indicator, is a big fan of volume profile. So you know, it's got a lot going for it. But I look at it really simply, and if you're looking at this, what I call my field of play, which is value area high down to value area low. Yesterday's POC, on this occasion, yesterday's POC happens to be about midway, and you've got good opportunities to. I mean, if it moves out of the field of play, then you lose interest. But if it stays within, it will often keep returning to the red line. Anyway, I need to call it a day because my battery's getting very low on the Mac. So I'll put the video recording in Discord. It takes about 20 minutes to render, but it will be there later today. So thanks for jumping on. I'm back again tomorrow, and normal time tomorrow, 1 p.m. UK. So thanks for jumping on. I'll see you tomorrow.
Thanks, Richard.
Thanks, Richard.
Thanks, Richard.
Thank you.
Thank
Cheers.
you.
Thank you very much.